So far, President Trump calls his tax plan a Christmas present to the American people. GOP lawmakers introduced the 400-page tax reform bill yesterday.
We're going to save people time, we're going to save people money, we're going to simplify the tax code once and for all.
Under their plan, Republicans say the average family making $59,000 a year would save roughly $1,200 annually. Democrats, of course, disagree.
This bill raises taxes on the middle class, adds trillions to the debt while giving tax cuts to the wealthiest Americans and corporations while stripping credits and deductions from middle-class families.
To balance the cuts, Republicans are slashing tax breaks like the student loan interest deduction, the medical expense deduction, and the mortgage interest deduction. That last one has a big impact on the Bay Area, of course, because of our real estate prices. ABC 7 News reporter Wayne Friedman is live now with an explanation. Wayne?
Well, we're in Marin County, where the median house price is roughly $1.3 million. That's a lot of money, especially for a first-time buyer. It's also a lot of money for someone who has already bought in and has an investment. So we spent today talking to real estate agents, to buyers, and to sellers, and we received mixed reviews.
Yesterday,
you may have heard the loud complaints about the Republican tax plan from Democrats in Washington.
it's really making suckers of the American people.
Now an informal survey of Californians who may be impacted. We begin with Deborah Solvason, a Marin County real estate agent who worries about how such a plan might change this landscape.
It's not going to make it more affordable. It's going to change who owns the homes. That's what it's going to do. It really pushes out our middle class.
The proposed changes would cut interest rate deductions on a $1 million mortgage in half. Look at the numbers. They may seem high compared with the rest of the country, but not in California, especially when the plan also limits personal property tax deductions while at the same time cutting corporate taxes.
If you're a landlord and investor and you're buying a home, you still get to deduct the full interest and the cost of owning that home. But if you're a homeowner, you can't.
Real estate agents predict the cuts will drive housing prices down. That cuts both ways. Rachel Hughes, a teacher, is close to finally buying a condominium after saving for 20 years. Should it have taken that long?
Well, I mean, obviously you work hard and you want to, get to a certain point in your life where you want to end the renting process and become a owner of something.
But for Josh Morton, who's already invested and paid a higher price, it's a game changer. This husband and father of two may try to sell his condominium early for fear of its losing value. As a so-called member of the middle class, he is not convinced by the Republican plan.
That the Republicans would be less apt to care about how it affects us because we're effectively not, on their side.
Those would be the views from inside the crosshairs. In Marin County, Wayne Friedman, ABC 7 News.